I just want to just talk about something that is interesting. That what we're using to actually communicate with people, what we have been using to communicate with people for over 2 years, is a company called Zoom. And Zoom went up crazy during the pandemic because everybody was home and the schools had to use Zoom and everybody was working remotely. Zoom currently 62% off of its all-time high. But it's interesting that you say it's dead, Ian. So why do you think Zoom is dead?
Going back, okay, so I'm gonna use your brain. So if I come to you and say, hey, there is a technology company in which we can video conference with everyone, but the current, let's say at that time, the price was $321. Your first question is going to be, who else is in the landscape? Now you can use Google, you can use FaceTime, other apps you can use. There is no real competitive advantage. And there's difference between like what happened in 2020 and 2021, or like early, everyone was chasing gains and we saw it. And it's the issue. And I'll do book of the night first, one up on Wall Street. The issue with active management, what Kathy did is like actively trying to pick stocks that are going to win opposed to, let's say, passive, right? Because 2Tech2 index is a version of passive and active because Vanguard is like managing that, but on a quarterly or yearly basis. Zoom has no direct advantage. Then the top 4 hedge funds are not actively investing in them to keep them afloat. And because everything took off to the upside, they then went to the B and C players to push them up to not lose clients. It wasn't anything really the Zoom did. It was great for that time, but anyone, if you took your emotion out of it and you say, hey, is a video conferencing app worth 588 or 400? Everyone on earth would have said no. So great product, but there's a lot of things that could do better in terms of the product line, efficiency. We've had issues here. I get that as you scale, you're going to have that. But if Zoom died tomorrow, would it devastate our business and our lives? No. If Apple closed tomorrow, it would change the entire world. If Microsoft closed, it would change the entire world. If AMD and NVIDIA went out of business, the world will come to a gridlock. So I always ask myself, if my life was on the line and Xander's life was on the line, and this was my last dollar, would I put it into this company? You guys answer me in chat. Would Zoom be the one that you go to save you and your child's life? No. There's no competitive advantage. Great company. But like you said, when it's in the clutch, and I treat every investment like it's game 6, I get one shot. They're not Jordan. They're Dale Ellis. Shout out Dale Ellis. I don't want to smoke if you got a crazy cousin.
Now you got the ratchet.
Yeah, but you have to understand the difference between A players, B and C. Say C company. Seen the same thing with Virgin Galactic. C player. Great initiative. C player. And great companies don't fall 50 and 70% off their highs, usually. You don't want to touch this one.
Yeah. And Microsoft Teams is just as efficient.
Microsoft Teams trash on the low. I love Microsoft, but Teams is trash.
Troy, I'm gonna we're gonna go back to Microsoft, but before I just want to talk about CrowdStrike for a minute because you kind of breezed over that. Yeah. But CrowdStrike is an interesting stock. I know that's one of Wall Street Trapper's favorites. Mm-hmm. And cybersecurity is something that well, if anybody doesn't know what CrowdStrike is, it's a cybersecurity company. Mm-hmm. So cybersecurity is something that is very, very important. Is going to be even more important in the next decade. Which is why, a lot of people are bullish on CrowdStrike, but CrowdStrike has struggled. It's down $130 from its all-time high. So people are looking at different things. What made you invest? Like, what was your thought process in investing in CrowdStrike today?
Yeah. You just gave the reasons why. Obviously, the 52-week low. I didn't have any investment. Well, I had a Zscaler.
Well, it's not at a 52-week low, but close.
Close. Yeah. It was one of the reasons. And when Trap said it, ever since the moment he said it, I've watched this on my watch list just crank up and run. And I'm like, man, I missed my moment. And I was just patient with it. I did, like, again, I said Zscaler was one of those things that I was interested in. I did option call on that. But I really wanted to have some shares in a cybersecurity company. And if we're looking at the top of the list, cybersecurity companies, I was like, all right, well, here goes my chance. It hit my number. I said, all right, will it go any lower? It did. I grabbed some shares of it. So that was my whole mindset of it. Like, be patient. Wait for it. Here goes your number. You like it here. You don't have to load the boat. Like I said, I like to call it tapering investing. Like I'll put a little bit in it at this number. If it gets even lower, I'll put even more.
So give an example. You don't have to get the exact dollar amount, but give an example.
I mean, I did it with.
Unless you want to get the dollar amount.
I'll give the dollar amount for Microsoft. Can we do that? Because my CrowdStrike is my notes are on my table upstairs. So like, for example, when we saw Microsoft run up to 350, right? I'm looking at this number. Okay. I have my moving averages there. I'm like, okay, if this thing, am I going to buy shares here? No, I'm not going to buy shares at the top. Obviously, we know just for the simple point that we don't buy high, right? We're going to sell, buy low and sell high. And so when I looked at it, I'm like, all right, well, I'm going to wait to get my shares. Because like, again, Apple was my 1,000 share. AMD is going to be one of my 1,000 share companies. I want Microsoft to be one of my 1,000 share companies. And so
AMD.
Yeah, I'm gonna go there in a sec.
That's interesting.
I'm at 500 shares there. And so Microsoft is one of the next ones I want to have 1,000 shares of. So I'm looking at a time to get a price point. And so I had it at 296 because I looked at the 200-day moving average. I said, all right, if it gets on this level, I want to see if it bounces back. Will it bounce off its 200-day? Because some of these stocks you can watch and you can see it play off the line, whether it's the 100-day moving average or the 20-day or the 200. Like that's my lashes. So I'm like, all right, if it gets to 200, which at 350 seems like how can Microsoft pull back to 296? But here we go, 17% correction in the NASDAQ. Here it comes moving down. Okay, well, it hit the line and it trailed under it for a day. I said, okay, well, I have to find a point. Where's my point? Okay, I'm watching it 280. 280, I really liked it. When I saw it at 277, I actually had to pause my screen because Lawrence was talking. I said, all right, I got to focus on right now. I did it at that number, executed. And as soon as the day was over, I didn't look at it because I had to do some other things. But again, it went right back up to the line. So when we use the moving average as an indicator, like I like to, we can see it. Will it bounce off the line? Will it trail under the line? What happens when it gets to the line, right? Typically, when Microsoft hits that 200-day after it trails under, it trends back up.
Solid, yeah.
Do not buy high, ladies. And no matter how many times you say this, it's human nature. It's human nature. We see it with cryptocurrency. I want to talk about crypto. We see it with cryptocurrency. I saw it happen in 2017. I saw the same thing happen this year. People buy high and they sell low. The reason being is what's called FOMO, fear of missing out. So when everybody's talking about something, everybody's showing how much money they made, you feel like you're the last person on earth and you want to take advantage of it. We saw it happen with Dogecoin, and you put money in at the high, and then the market starts to crash, and then you panic, and then psychologically you start to say a 50% loss is better than 100% loss. This thing can go to zero. Give me my money back. I changed my mind. You sell, and then it goes back up again. And this is a very detrimental cycle that most retail investors follow. And this is why most retail investors lose. Investing is a losing game for most people. That's the part that nobody fully understands. Most people don't make money investing
because you guys don't hold long enough.
Yeah,
that's number one.
That's the second one. Like, I think that's the full sentence.
That's a key, but they take too much risk.
Yeah.
Yep. Do index.
Do things off of emotion. Don't hold long enough. Buy high, and they sell low.
Yeah, the fear like it sounds like it's so cliche, but the fear of missing out is a real thing. It's like when he calls me and he's like, "Yo, Apple's at 180, man. This thing looks like it's running." Just patience.
Yep.
Patience.
And the other part of it outside of FOMO, sometimes people buy at a high or at a bad price, so they can have the actualization and realization of saying, hey, the stock market thing didn't work for me. Because the thing about becoming wealthy or generational wealth and all that stuff everybody talks about, there's a heavy ass responsibility that comes with that. So now if you buy at a good price, you're expected to do it again for your friends, yourself, and or your family. A lot of times people are sabotaging themselves. And that's why I always tell you guys, like, you're worthy of winning, of being healthy, of being happy, of having money. This is one of the easiest markets, but if you don't wait for the right price, and this is business 101. I don't care what the business is. If I put my money into it, for all those of you've been pitching me, if I put my dollar in, I want 10 back minimum. Guaranteed I want back 50. That's why I lean towards tech, because I know over 5 or 6 years, I'll get 50x. I mean, 50 own that money, right? If anything, $2 at the top, I at least want to buy minimum at 50%. Anything higher than that, you're gambling. Wait for the prices to come back to where they should be. And go watch every past episode if you want the blueprint to how to win in the market. And if I made you money, put yes in chat. $269.57 is the price for Microsoft. And listen to us. I'm begging you. The number of shares that you have is more important than a great price that you got in. Because if you got a great price and 10 shares, it will not matter. It will not matter. I promise you.
Yeah. No, CrowdStrike hit its low today. 150 was its low today. So I had my wife, shout out to my wife. She's watching. She texted me my notes from the table.
To the queen.
So I see my notes. I had Crowd at 210. If you got to 210, that was a number I like. But then I just kept watching. I'm like, okay, well, let's just see how low this thing goes. I'm gonna go. All right, this is my number. I'm getting it right here. But it didn't fill.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.